The United States credit downgrade could have an impact on Egypt for beyond reducing the value of its dollar-held foreign reserves, with the stock exchange, foreign direct investment and overseas trade all taking a hit. Egypt is witnessing the most significant effects in the stock market, where large capitals outflows from foreign investors took place. This week, the first trading session since downgrade, the Egyptian Stock Exchange main index dropped more than 4%, with much further difficulty in sales of governmental securities being expected. Selling Egypt government debt is already difficult this year due to foreign reluctance. There isn't much more damage that could be inflicted there. The balance of payment might also be adversely hit by the deterioration of world economies, especially those that have heavy investment and trade ties with Egypt. Egypt is witnessing this week a severe drop in capital flow from foreign investors, especially Americans, as foreign investors prefer to direct their investment locally in their countries as their surpluses are limited. American investors in particular have a commitment towards the Far East, which is where their money would go should they invest abroad. The trade balance could face disruption if the crisis acts to dampen American and European demand, as both economies are among Egypt's top trade partners. Standard & Poor's cut the United States' top-tier AAA credit rating a notch to AA- on Friday in an unprecedented blow, resulting from the concerns about the nation's budget deficits and climbing debt burden. Another point of concern is Egypt's foreign reserves, which reached $25.7 billion at the end of July. While the breakdown of how reserves are invested is not disclosed on periodical basis, some analysts believe they are heavily invested in U.S. government securities, which could prove risky if the U.S. starts having trouble meeting its commitments. Egypt has been investing a large portion of its reserves in the U.S. Treasury bill purchases, which will be difficult to redeem if the U.S. debt crisis intensifies. However, Egypt's finance minister Hazem al-Biblawi said foreign reserves are not only in dollars and that the basket of international reserves is quite varied. Egypt's international reserves are mainly made up of foreign currencies, accounting for over 90% of the total by the end of 2010. Egypt also keeps gold reserves, whose share grew from around 4.5% in 2006 to 6% in 2010. Over the past few years, Egypt's central bank has modernized its asset management methods and employed sophisticated models for risk mitigation. It successfully overcame the Greek economic crisis by swiftly shifting Egyptian assets at risk with Greek securities to safer instruments. Egypt could also face risks from the depreciation of the U.S. currency, which might bring a loss in real value for Egypt's foreign investment. Most experts, however, exclude the possibility of major drops in the value of the dollar, as this would have a devastating effect on most of the major economies worldwide, including China and Japan.
Welcome back, ladies and gentlemen, to the second segment of tonight's edition of the Daily Debate, where we take a look at the latest developments in both the Egyptian stock market as well as the global markets. Of course, as worries build over the global economy, the Egyptian stocks felt the early impact of the U.S. credit downgrade nosediving this week to reach an unprecedented level it hasn't witnessed since 2 years, losing 33 billion Egyptian pounds. Quite influential sum of money there. And joining us tonight in the studio to discuss this topic in more depth is our guest, Mr. Nader, Khedr, investment and capital market analyst. Thank you very much, sir, for joining us tonight on this edition of the Daily Debate. Now, of course, the Egyptian stock market has reacted just as most bourses and stock markets around the world. How did the U.S. debt crisis affect the Egyptian stock market, in your opinion, and make it plunge with more than 4% in just one session this week?
First of all, let's clarify a little point regarding this huge lump sum you just mentioned.
Right.
This 33 billion Egyptian pound is just a numerical number, not an actual loss.
Right.
Which means if I'm holding a share in some company and this share is valued at 10 Egyptian pounds, if I didn't sell, I don't realize loss. I don't give myself the loss in real. However, as the market is going up and down, some would like to calculate it as a wholesome number over the total market capitalization. But this is not the real world in the stock markets. However, we cannot deny that there has been losses happened. A lot of investors panicked in the sale-off that happened during the past 3 sessions. Fortunately, we have started to rebound today and to start regaining some confidence, but not yet from the foreigners. They are still heavy sellers. Despite the stability we are starting to witness, as a fact that they are having a crisis and they need their money, so they are liquidifying their investments in Egypt as to save what can be saved in their markets.
Which is further affecting, of course, our stock market. Now, to what extent is the U.S. debt crisis the main cause behind the fall in the market that we've witnessed here in the country?
Actually, I would give it a responsibility of 30% to 40%. There are other reasons. We have the London issue that has been erupting severely during the past same 3 days. We have the Euro debt crisis. We have the Syrian issue tangled with a Turkey-Iranian role regarding who's the ruling line in the area. Syria is not an independent country or an independent island in far off sea. It's a linkage between Turkey, Iraq, and Iran, and it's considered to be the valve of power balancing in this area. If any candidate of the 4 countries, Syria, Turkey, Iraq, Iran, try to take over a little bit more piece of power, would affect the others. So this is why we have seen His Excellency Minister Ahmed Dawood Oglo did visit Syria during the past 3 days to try to ensure the common understanding between both.
Right.
However, Iran is expected also to make a move soon, but yet we cannot estimate how much this would be. This move would be powerful on the Turkish level. Of course, on the Iraqi level, the U.S. is there, and they are having their problems already in their economy, so they are not giving much of care for what would happen in this area particularly. However, they are following it up closely. Yet the economic issue there is the biggest thing to be taken care of first, and then they could take care of other things after that.
Right. Now, Mr. Nader, do individual traders assume that after such a sharp drop there will be a rebound? That seems to sometimes be the trend in the stock market. Do you think that this is why we've regained today some of the liquidity, or how does it work? Do investors think that they will be a good rebound?
As they say it, as the English say goes, what goes around comes around.
Right.
So if we went down, so we have to come up. And no kid will ever stay in the dirt after he falls in his face. He has to get up, he has to weep a little bit to clean up his clothes and go to his mommy, tell her, Mommy, I fell off, please help me. Okay, that's how life goes. Accordingly, this is how stock market goes. We went down, okay, we have felt the crisis. Foreigners have been selling a little bit. Okay, we will come around again. We have our internal issue, we have our internal economy, we have our internal reserve in gold and other foreign currencies. However, it's still early to estimate the impact on our foreign reserve and our exports and imports yet, because we didn't see the full impact of the U.S. debt ceiling crisis, because it's a domino effect. If we remember the less development countries' debt crisis in the early 80s, when the Mexican finance minister announced the inability of Mexico to pay its installments on mid-August 1982. It impacted after, I think, 12 years, the Far East, not only the US. The US, we have witnessed after only from 5 to 7 years, I think, the saving and loans crisis, which was late 80s. It was due to that the commercial banks have gone so far in the sovereign debt regarding the Latin countries, which were considered at that time a third world or a third category of the world. Accordingly, what we are seeing now would impact Asia. However, it would take some time. It won't be a direct or imminent impact.
Right.
It will